Is there anything that seems concerning to you about the setup right now for traders and investors?
Well, I think I'm always concerned about a lot of things, Don, but you just pointed out the VIX, and it's almost like it hasn't had a pulse in 2 years. So from a trading perspective, and certainly from an option perspective, it's like a lamb sleeping against the lion. So what concerns me moving forward certainly are valuations. We can make a case that markets are close to full valuation here based on next year's earnings. Obviously, the data from inflation is important to determine what the Fed's going to do next. And this week specifically, it just comes down to the U.S. consumer because we get retail sales today and we get the retailers reporting, and listening to what they're saying about profit margins and sales moving forward are the things that I'm going to be paying the most attention to.
So if we're just showing the calendar right now, because as you point out, there's a ton of stuff happening with regard to a check on the pulse of the U.S. consumer. Is there anything that can happen either from one or two key reports or thematically across the week that changes the market narrative overall and where stocks could go from here for the second half of the year?
Yeah, absolutely, Dom. And very specifically, it comes down to profit margins and pricing and earnings forecasts. So, inflation coming down is great. I mean, we don't want the Fed to continue to raise rates. They need to see an abatement of inflation. Lower inflation also allows us to have an expanding multiple. And maybe right now we're looking at the markets trading 19 times next year's earnings. But the one thing we have to pay attention to is that inflation coming down can affect earnings and profit margins. It hasn't yet. Econ 101 is prices go up, sales go down, and that just hasn't happened yet for a lot of reasons. But you can push the consumer only so far in terms of price appreciation. So what we want to see is are retail sales still resilient today? And are the earnings reports showing that people are still spending? There's been some cracks in it a little bit, just kind of percolating under the surface. Tesla's been lowering pricing on cars. Ford slashed the price of the Lightning. Now, they say that has a lot to do with supply chains easing up, and it very, very well may. But I have to think that mixed in there is some pricing pressures. We own Procter & Gamble. Their earnings were really, really solid, but there were some hints that they can push pricing only so far, and it was affecting sales. So paying attention to all those retailers that you just showed this week, I think is going to be very, very important to get the state of the consumer. Because as long as the consumer is resilient, which is our word of the day, the stock market can continue to do well. Once that pricing pressure puts too much weight on the consumer, then we've got to be really, really cautious moving forward.
All right, so resilient consumer, that's what we've been all banking on. Kevin, before we let you go, is there a part of the market that you stay completely away from right now, just a little too risky?
Well, I have to be allocated to all sectors. So I think if we're talking about things that might be a little ahead of their skis, the mega tech AI stocks, and I know you're covering NVIDIA, as we all pay attention to it, the valuation isn't a bubble by any means, but taking some profits into strength, I think, makes sense. So for us, we own Microsoft and Apple, and thank goodness we do, but we've been trimming them along the way on the way up. Again, just a little ahead of their skis, valuations a little pressed. So much of the market hasn't participated yet. There's been a broadening out in July and into August for sure, but there's opportunities in underfavored sectors. And I think if you look at financials and healthcare and energy, that you can make some money in this market towards the end of the year.